India is in a unique position which is actually in sharp contrast to the rest of the world. Europe is in a deep systemic long-term challenge. America is somewhat better because America is still more entrepreneurial, more resilient.
India has had a phenomenal GDP growth rate, yet you are saying our future would be better than our past.
There are three sources of returns. One is your growth rate, second is the quality part, and third is the margin of safety. And therefore India has both the aces up its sleeve. The rate of growth superior than the past and the quality of growth distinctly better than the past. It is entrepreneurs who really have the fire in belly, who have ability to think through the issues and take an intelligent risk to counter the challenges. You have to envy all the young people in their 20s and 30s and 40s because the next decade or decades is going to be one of the breathtaking period of wealth creation in India.
I always keep asking that question, when will Indian equity emerge as an independent asset class?
Indian markets were characterized by much more violent cycles, impact, and the quality of voice of foreign money has declined.
So it seems nature itself wants India to take leadership now. As I keep saying in each of the episode, AUM Finance podcast is based on first principles of investing. We do not discuss day-to-day markets here. We discuss rules and principles which stand the test of time. And you would be wondering whom I have today. So I have Mr. Bharat Shah. Bharat Bhai, to introduce him formally, is the Executive Director of ASK Group. ASK Investment Managers is not only the longest serving PMS player in the country, it is also the biggest AUM manager in the country as far as PMS portfolio management services are concerned. I believe ASK Group manages around 38,000 odd crores in AUM today.
In PMS that much. Yeah. In aggregate across our businesses, close to 90,000.
Close to 90,000 crores. So 90,000 crore is the asset under management. That is double of what I was expecting. One of the biggest financial entity in the world, Blackstone, happened to buy a couple of years back, I think around 2022, they happened to have a 70% stake in this entity. That says a lot about what the entity is and what their pedigree is. So Bharat Bhai, welcome to the AUM Finance podcast.
Thank you very much.
So Bharat Bhai, my first question to you is, can you paint a picture of the world economy today from an investor's point of view? How the world is positioned, how is US, China, other emerging markets, and in that light, how is India positioned?
I think one of the critical challenges many world economies are undergoing is that of leadership.
Okay.
So if you look at in Europe, that's very evident. In America also it is evident. And in many other parts of the world, there is a crisis of leadership.
Okay.
In terms of formulating policies and plans. Forget about executing. And therefore, India is in a unique position which is actually in sharp contrast to that of the rest of the world. This is something which has not happened easily. It has required many years of efforts of last several years to have brought us where we are. And the contrast with what we are seeing in the rest of the world is remarkably unique, which actually usually used to be the other way around, where our policy leadership, formulations of ideas were generally weak, and therefore we constantly suffered in the sweepstakes of the global kind of a chessboard. Today I think India is in a unique position where not only we are providing policy and leadership in many areas, but also we are demonstrating how to execute things better and faster rather than being slipshod about it. Therefore, if you look at, for example, post-COVID or while the COVID was on, one of the biggest failures of the policy formulation in Western world occurred. Prior to that, we witnessed in 2008-9 how Western world, mainly America, but equally Europe, kind of caved in because of the excesses created for a long period of time.
Okay.
And therefore, in COVID also, it doesn't look like as if the Western world has really learnt much. Therefore, while the COVID was on, and obviously policies were needed to counter that difficult phase, the India embarked on reforms and worked on supply side initiatives rather than stimulating demand by throwing freebies and subsidies, which is populist and politically convenient, but with a great restraint and discipline, India avoided that trap. The Western world actually wrote checks and sent it to the people, which is basically creating inflationary outcomes without any supply side reforms. Prior to that, America and Europe both had driven down their interest rates close to nothing. And therefore, when you abuse the capital by trivializing its cost to next to nothing, at some stage you pay the cost because you have violated the dignity of usage of capital by not letting any meaningful cost to be charged. When that abuse of capital happens, it may be popular it may result in asset inflation in the short term, but eventually some cost has to be paid, especially if underlying economies are weak otherwise and are not in a position to really stimulate economy with that kind of a low interest rate without suffering the consequences. Therefore, without learning lessons from 2008, the Western world replicated the similar behavior preceding the COVID period, where interest rates were driven down to virtually nothing. Money was thrown in excess in the system, and therefore, obviously, when the COVID thing occurred, they were caught naked, and therefore inflation suddenly shot up in the Western world to the unheard levels of 15% and 20% and even higher, and they have not seen for decades. Probably after World War II, the Western world has not seen this kind of
inflation.
Interest rate, inflation, inflationary behavior, except for a short period when the oil shock occurred in 70s. The further to make matters worse, in the COVID, instead of taking reforming steps and working on supply side kind of thing, it further committed a sin of writing checks and inflating demand, and to take populist and politically expedient kind of a step. And therefore, not only inflation has relatively remained stubborn, their ability to deal with the consequent issues is very limited because they have not really created any, like they say, every crisis is an opportunity, and it is the biggest wastage of a crisis by not using it intelligently to your subsequent use.
Every crisis is an opportunity, and if you don't make good out of it, you wasted a crisis.
You wasted a crisis.
Okay.
And therefore, not only Western world repeated crisis after crisis, but did not learn further and created further ruptures. Therefore, today, Europe is in a deep, in my opinion, based on whatever little I understand, not that I know much about Europe and America and all that, but whatever I can see, they suffer from a lot of systemic worries. There is very little entrepreneurship in Europe. There is very status quo kind of society which is unwilling to change, unwilling to adapt to the new things easily. And the abuse of the inflationary, abuse of the COVID period behavior, and the abuse of capital preceding that all have left Europe in a very deep trouble where it is difficult to see how it will come out and how quickly whether it can come out. America is somewhat better because America is still more entrepreneurial, more resilient and more adaptable, and at least in technology area America still has leadership.
Leaders, yeah.
But that none of this you can say easily about Europe. Therefore, Europe is in a deep systemic, long-term challenge which is facing societies, political economy, and economy itself of those countries. While America is somewhat better, but I think in America also the policy leadership has been poor. And it is evident in the way things have shaped up over the last few years. And therefore, I suspect America would have a challenge, despite innate entrepreneurship and resilience of the American people and the American businesses. I think in terms of the policy formulation, there are a lot of challenges in that place. And it reflects in their society, it reflects also in their political economy as well as in economy. And therefore I think even America would take time before it really asserts back into the more normal kind of a situation, of which not too many signs are easily evident. And you can see it in many steps the Western world have taken over last few years, which really baffle you as to how they are really thinking through the issues. As a layman, I feel. So I sometimes wonder as to how these large and successful societies and economies are pussyfooting and dragging their feet in adapting inevitable and trying to push it out of the window, which is very unfortunate. Most of the economies in Asia, say other than China, have their own issues. Japan again, very little entrepreneurship, long periods of trouble that they what they encountered in abuse of 80s. The effects have reverberated for a long period of time. It is just recently that America
reached the all-time high after 25 years.
No, after 34 years.
34 years.
And South Korean markets have not even crossed after 35 years.
We can say lost 3.5 decades for Japan.
Yes, completely lost decades of Japan and even in Korean markets, which is the case. Both of these societies also have adverse demographics and again more status quo kind of society, considerably diminished entrepreneurship in these countries, and therefore societal capability to deal with significant challenges is somewhat limited, because it is entrepreneurs who really have the fire in belly, who have ability to think through the issues and take an intelligent risk to counter the challenges. Because any significant challenge, countering that requires a mind which is resilient, with a fire in the belly, with a capability to think through and take intelligent risk. Because risk taking fundamentally is an issue which is evident in any business activity and by implication in any stock market activity, because risk assumption and intelligent risk assumption is the key part of any business entrepreneurship or, and by implication, of any stock market investing. So these countries also have challenges. China's policy formulation in last several years is, to put it mildly, baffling. It seems that it is kind of working at crossroads of its own entrepreneurs and entrepreneurial system, which is strongly reflected in very poor stock market performance in China for a length of time. And therefore, I suspect that Europe, America, most of Asia have meaningful long-term structural challenges which are not easy to fob off or to push it out of the window easily. Latin America has many political and societal challenges, and therefore it will take time. Africa similarly, and therefore none of those really can offer any meaningful counter to the many challenges of the world. Not to speak of geopolitical challenges on the top of these, that these countries have invited upon themselves. I mean, to have so many of these geopolitical adversities which have been going on for last couple of years, and you just don't understand what is going on, why these kind of things are persisting for so long, which is obviously hurtful to their own long-term interests. And I would say not only economic interests, even their political interests over a period of time, I think will be severely affected by this, is my personal opinion. But still, these conflicts and challenges are going on for more than 2 years now, in different shape and form. India, on the other hand, during the challenge of COVID, with limited economic resources, limited health infrastructure, and significant part of the population which needed help during an unprecedented challenge like COVID, it was very tempting to do populist thing and throw freebies at people. But India wisely refrained from that, despite a lot of criticism that it faced. And I think India, instead of surrendering to demand-side inflation and creating disruptions, because if India would have done those demand-side inflationary measurements, rupee would have gone for a toss, inflation would have been deeply troublesome, and we would have suffered very, very badly in this period. The fact that we are actually able to counter, and we have seen in the third quarter GDP growth at 8.4%, contrary to most of the pundits' opinions and forecasts. It really shows that we did something right, that we did not pander to the compulsions of short-term allurements, trying to throw politically convenient kind of freebies at people, but in fact embark on tough and important reforms so that we really actually create an opportunity out of the challenge. Production Link Incentive Scheme took birth during this period of time. Our Atmanirbhar campaign really received a further fillip in this particular period of time. Our digital roots have become a source of pride globally.
Yes.
And obviously in these challenging phases, actually we catapulted ourselves in the leadership position as to how to manage digital public infrastructure of a kind which even Western world cannot boast of.
Yes.
Where you have everyone's identity, digitally identifiable in a fraction of a second, where we can link that to the bank accounts so that bank accounts become digital pathways, and mobile phone completes the trinity of that, and which allows many powerful payment and other digital technology embracing steps, which has really put India into the forefront of the digital public infrastructure, which even no other really country can counter or can boast of anywhere nearly similar. You would have seen recently in WTO, which negotiation just concluded 2 days back, one of the important points that India was actually pushing, and rightly so, whereby the payment infrastructure that India has created through UPI and many other such initiatives, India is willing to populate to the rest of the world, especially many other developing countries and many other societies which have no real capability to come up with something like this on their own.
Yeah.
And interestingly, America kind of did not allow these populating of digital technology to the many other countries, which one would have thought is being a good Samaritan to the rest of the world, that many other countries will benefit from this. Their payment mechanisms will take a leapfrog, societal efficiency will take a leapfrogging, and economic efficiency will ride on that. And yet it is hard to understand, or not so hard to understand, why America would scuttle such a thing.
Right.
Whether American hegemony or those many long established payment pathways that they have, which are under threat or whatever.
Yes.
But you can see that how these games are being played. Therefore, I think we really have built a panoply of reforms today. Reforms, when they are few and far between, they have a limited impact, beneficial impact out of it. And it comes more in an incremental form and maybe arithmetic sum total. But when reforms are many, they are deep, and they occur with a recurring frequency and they are logically linked to each other, then they create an ecosystem, and the benefit is no longer arithmetic but geometric
progression.
And it is not incremental, it is a tearaway kind of expansion. And I believe India is roughly at a stage of something similar, where the economy is in a takeoff stage because of many of the important reforms having come together, and now they are building a powerful ecosystem of its own. Therefore, it feeds on each other and creates a virtuous cycle of expansion. And I believe, therefore, Indian economy will not only expand at a rate much higher than India's own past, but I think it will grow at a rate much faster than any meaningful comparison anywhere in the world for a length of time. Secondly, more than just the quantum of growth rate, three important major changes which have occurred, which work towards creating greater value. One, the reforms bring predictability to the economic outcomes over the period of time. Otherwise, economic outcomes are happenstance or a chance, but reforms give it a predictability and solidity.
For a very long period of time.
Yes. Second, the predictability and solidity reflects in the durability of the impact, and therefore it gives a compounding power rather than a short-term kind of a benefit.
Yeah.
Third, the quality of growth itself is much superior than the past. One telltale indicator, return on equity of Indian corporate sector for the first time last year exceeded that of America. American hallmark of American capitalism has been superior return on equity for decades, and always number one in the world in that, and no surprise that that has paved the way for America
Stock
being
market
at
wealth
number
creation.
one in market returns over last 30 years. You
Right.
know. But for the first time, Indian return on equity has exceeded that of America. And I think it has a tale of its own to tell over a period of time.
Wow.
Therefore, quantum of growth rate, the predictability, the durability, and quality of the growth, all today I think are synced together. And therefore, I believe the market outcomes, which is an offshoot of what happens to the businesses, is not going to be for a short period. The growth rate of economy will translate into performance and the cash flows and the profits and the top line growth of the quality businesses. In turn, it will reflect in the value of those businesses, which in turn will reflect into the wealth of the owners of those businesses, and finally it will reflect into the portfolios of the investors who own these long-term franchises of very high quality variety. The period that I am talking about is not some 2 years or 3 years or 5 years. In my opinion, we are looking at the golden decade, if not decades, for India ahead. That is the picture we are staring at today.
So Bharat bhai, you painted a very, very bright future for India, and rightfully so. And it seems that India is really finally going to lead the world, at least in terms of economic leadership. I mean, somewhere there is lack of political will, somewhere there is lack of entrepreneurship. In fact, in terms of entrepreneurship, there are only two economies in the world, US and India. And India's
China has, but China
but the government is cutting that.
Purpose with the Chinese entrepreneurship.
Right, which is to the advantage of India.
That's right.
Okay, so it seems nature itself wants India to take leadership now.
You can say that.
We can, right? So that past era of Sone ki Chidiya we might see in our lifetime. We can see that kind of a.
Well, we shouldn't get too excited too early, and we shouldn't count all the chickens before they are hatched.
Yes.
We have an opportunity, but we have a lot of hard work to do.
Yeah.
There are still a lot of gaps that we need to fill in. We have capacity. State has now got a capacity to build that and fill that. Now the society and citizenry and the businesses and entrepreneurs have to take the challenge ahead and build it. We have an opportunity of a kind that probably comes rarely in lifetime of a country also.
Right.
And therefore we have to embrace it with all hands. Government has done many important reforms and changes which have been vital, tough, difficult to take, but they have done it. And that has brought this country to where it is today. But for us to take it ahead, it will be incumbent upon all of us, the citizens of the country, the businesses and owners of these businesses, the entrepreneurs, as well as the shared will and desire of the country to succeed, which is due to you. I think all the elements are in
Coming
place.
together.
We have a great opportunity, but we shouldn't get too elated and too exuberant in advance. We have to do a lot of hard work. In every step, still there are many, many challenges. Some known, some others which are unknown and may occur. And yet we have to have a resilience and strength to overcome all of that and do that. But if we do that, I think India is finally really in a position to distinguish herself for her due place under the sun.
Okay. So one thing is sure, India is the place to bet your money, whether you are a Dubai Sheikh, whether you are a European aristocrat, whether you are an entrepreneur in Silicon Valley in US, whether you are a businessman in Japan, wherever you are, if in your portfolio Indian equity is not there, you are going to miss something. very big in the coming decade, if not decades?
I'll give you a summary of how GDP of some of the largest economies have done and how the market returns have happened. Japan and South Korea. Japan was in that club of Big Five.
Yeah.
It still is the fourth largest economy.
Fourth largest economy.
The ability of the Japan to create the magic of the past is clearly behind, and that reflects in the stock market reluctance to participate. South Korea, similar thing I narrated. Let's take, and I'm counting Germany out because Germany seems to have lost that vitality for it to remain at the forefront of a change.
Okay.
Because Germany itself is trying to grapple with how to deal with a change. So they are unlikely to be in a position to create a change of their own. Is looking very difficult for me. So despite it being one of the top 5 economies of the world, I would still count Germany out. Largely manufacturing based economy, that too within that mainly automobile, and within automobile also till now mostly traditional automobile. The new technologies Germany is still trying to adapt rather than be a leader in setting up those technologies. And German, while very industrious and hardworking society, unlike many other parts of Europe, which is a favorable point for Germany, still there is that bit of a status quo kind of society which works reluctantly to change and adapt. What they do it efficiently and well, but for them to move to where they need to be, there is always a bit of a pussyfooting by Germany. So I'm leaving that out. America, India and China. Take last 30 years and take the GDP growth rate in nominal terms, in dollar terms, and compare it with the stock market returns also in dollar terms.
Yes.
In 30 years, America grew economy at 3.8% in dollar terms. That is the currency in which the country is.
Compounding.
Nominal GDP growth rate at 3.8%. Market returns 9.2% per annum compounded. Number 1 in the world. India 8.5% nominal GDP dollar term, 8.4% market returns. So America more than 5% premium
over the
nominal
growth
GDP rate in terms of returns. India
match
0
the nominal,
premium, but no discount thankfully. China 13.5% GDP growth rate
and market returns
and less than 2% market returns. That is the story. The big discount that China has suffered, significant premium that America has enjoyed, and no premium but no discount that India has gone through in these 30 years is the story so far, where America has been number 1 in market returns, India a close number 2, but still a fairly 8.4 and 9.2 compounded over 30 years is a material difference. And finally, China, which has really suffered despite unbelievably phenomenal GDP growth rate. Great credit to China for that kind of a great growth rate achieved.
So Bharat bhai, does that make China an attractive bet today?
Now I'll come to that. Now, these discount or a premium or no discount, no premium is not accidental in markets. It reflects that premium for predictability, governance, solidity, durability and quality of the growth rate, return on capital employed, return on equity, indebtedness of the balance sheets, the structure of the capitalist society, and many mature capitalist market mechanisms Many of these issues have a bearing on that premium or a discount or no premium kind of a situation that is evident in these three examples. There are three sources of returns. One is your growth rate, second is the quality part, and third is the margin of safety, which is one time. The first two are compounding, so to say, per annum kind of numbers. But the third, margin of safety, that is price today of something compared to what you think is the value today. And whether there is a discount or a premium. If it's a discount, then there is a one-time extra opportunity to cover the gap between the two, price and the value. If you take these three critical parameters which drive the returns and value creation, the future growth rate, the quality of that growth, and the margin of safety today, which is a one-timer and not a compounding one like the first two factors. If we have to make a forecast for future, India clearly will grow at a rate, in my opinion, much higher than that 8.5%. And on a much larger economy today than it was in the past.
India has had a phenomenal nominal GDP growth rate, yet you are saying our future would be better than our past.
I definitely believe it will be materially better than the past and on a much larger base.
We might hit double digit also.
We will hit double digit nominal GDP growth rate for sure.
Not one off, but year on year.
Not one off, for a length of time.
Okay.
Secondly, quality of growth in India is actually improving. As I alluded to in earlier part what we discussed, that how reforms are building an ecosystem and creating a compounding phenomena, predictability, solidity, durability. India is reaping the fruits of, beginning to reap the fruits of that. Plus policy formulation, audacity of policy formulation, working hard in making them effective in execution at a ground level, and leadership which is committed to keep making that transition and in a state of hurry to make it happen. These will mean that quality of growth is distinctly superior tomorrow for India than what it has been in the past. And therefore India has both the aces up its sleeve. Rate of growth superior than the past and the quality of growth distinctly better than the past. America, I think, is underwhelming situation on both. Rate of growth, doubtful whether it can sustain, because mind you, entrepreneurship in America also is now limited to technology. You don't find entrepreneurship in other areas in America. And therefore, no surprise that really value creation in American markets has happened in technology names. If you leave aside them, rest of the Dow Jones.
That is where their leadership is. So I believe, Bharat bhai, correct me if I am wrong, there are two equity markets in the world. US equity, Indian equity in its entirety, you pick and choose. It's a very broad-based market. And US tech. These are the two bets you should have in your portfolio.
In a way,
you cannot miss US tech, because India will take decades before we go to those kinds of levels. That's the only missing piece in India.
That's correct. We are beginning to get there, but it will take a lot of time. Therefore, America has challenged both on the growth rate, and certainly it will not have the same premium that it has enjoyed in the past. It still will be a premium, I think, but not as much as in the past, because I think as a society, as a political economy, as an economy, I think America is probably seen better days in the past. China rate of growth clearly is unlikely. 13.5 is impossible for China to compound. Therefore, rate of growth is really going to come down hugely. The premium for the quality is hard to conjecture, but judging by the way things are, it looks doubtful whether there is anything in the offing which can suddenly catapult that premium part
for China.
Therefore, the premium so far they have suffered discount, but premium is a question mark. Rate of growth is a definite material decline. When you sum this up very clearly, in my opinion, I'll make three, even though forecasting is a dangerous activity and should not be done easily, but even at the cost of sounding foolish, let me put three propositions. Number one, India, which was number 2 in stock market returns over last 30 years in the world, will actually be number 1. Second, it will persist for a long period of time and not a short period of time. And third, the difference in the returns that Indian market will generate will be a margin of a difference and not a close number. Therefore, India will grow at a rate, Indian markets will grow at a rate faster for a longer period, and with a decisive difference between India and which next economy I still will believe will be America, but there will be a margin of difference between the two.
Wow, Bharat, that's a very big statement. I know you have only people like you, somebody like you can make that statement, but that is I was of the opinion, and I stand corrected after whatever I heard over the last 40-50 minutes, that maybe my children will not get the compounding that I have got or I am going to get in the next 10 years.
Well, you have to envy all the young people in their 20s and 30s and 40s and who can spare capital, because the next decade or decades is going to be one of the breathtaking period of wealth creation in India, of a kind which has not been witnessed in the past. And such phases, even for large successful economies, comes not too often.
Once in a lifetime.
Yeah.
So maybe we have 15, 20, 25 years of phenomenal economic and hence stock market growth. And India is a rare economy where the economic growth gets reflected, mirrored in the stock market.
So far, without having a premium. And I believe it will be a premium going
But isn't Indian equity valuations always trading at a premium to the world?
No, I mean, if we compare it, American markets have always enjoyed better valuations, and for good reasons, deserving one. And India, in general, Indian capitalism has been superior to many other parts of the world. And therefore, Indian businesses which have set up their firms and listed have enjoyed that premium because they've been sound and strong firms.
Yes.
I'm saying at a system level now we are going to witness many more of these.
Okay.
And in a larger overall context of Indian markets itself, rather than anecdotally some firms superior in
the quality companies here have been trading at P's which even the Apple, Googles of the world have never enjoyed.
No, that has to be put in a context.
Okay.
Ultimately, value of a business today is a function of 3-4 things. What is the expected growth rate in future?
Okay.
And its qualitative connotation coming from durability, predictability, solidity. Second is the quality of the growth, capital efficiency, return on capital employed, return on equity, moats that the businesses enjoy to protect themselves from the marauding external adversities. The third factor is a systemic one, which is the cost of capital in any system. I mean, if the systemically any particular economy has low and validly low cost of capital, by implication, valuation of the businesses has to be higher. Because ultimately value of any business while computing in denominator is some measurement
is the
cost of capital. And therefore any systemic legitimate low level of cost of capital or reduction in cost of capital has to reflect in valuations. Fourthly,
So, Bharat bhai, can I come here? You saying the denominator is the cost of capital. So, in America, the cost of capital is lower than India. Historically, the cost of capital is more in India compared to America. So, our denominator is higher. And hence, we were demanding premium.
no. I'm saying value of a business, and if whole market is converted into one business, then that of the market is dependent on four things. Its expected future growth rate, durability of that growth rate, solidity of that growth rate, and predictability. Predictability and durability are very distinguished ideas. Predictability gives confidence that the future is going to be what you believe, and therefore you don't get shaken off by in between events easily.
Yeah.
You remain with it and you
Yeah.
don't throw it away.
Yeah.
Durability gives a compounding power. Therefore, two businesses, let's say both start with identical level of profits and end up after a meaningful period of time with identical number of profit for both of them having grown at the same rate.
Okay.
But a business which has greater predictability, greater durability perceived in the character of business
Will enjoy
have
a
better
higher
valuation.
valuation.
The other part is the quality of growth, the ROC, the capital efficiency in form of return on equity, debt equity, strength of the balance sheet, governance, durability, solidity of the businesses to perform and to be resilient. Many of that quality of growth has a lot of impact on the valuation, because capability of the management, resilience and character of business to ward off challenges in the economic environment gives you confidence that something will prevail, even if there are challenges or there will be responses, and you will deal with that challenge. Third is a reference to cost of capital. Any reduction in cost of capital compared to past in any economic system will mean relatively valuation will be higher than the past. And any economy per se has a reduced cost of capital legitimately, not artificially created, would have that advantage in form of better valuation of the businesses.
And India is going to experience that in the coming years.
India has already experienced systemic reduction in cost of capital compared to what the cost of capital 10 years back was and today, due to fiscal and current account deficit control, therefore better inflation control, better current account behavior, and therefore reduced systemic cost of capital has an advantage in reflecting in better valuation. Fourth factor, which is important, if you see the P that we usually use to arrive at valuation is popular, arithmetically convenient to compute and gives it a mathematical kind of precision, but more often than not is a false one.
Okay.
By that definition, if you look at last 30 years, all through 30 years, Chinese markets have lower P than Indian markets.
Yes.
Therefore, by implication, that low P should have translated into higher return for that market. But we have seen there is a huge gap between the returns earned by India and what Chinese markets have earned.
And why is that so?
And that is because of the fact that P is not a great description of a real value. P is about immediacy, value is about distance. P is about profit, value is about cash flow. P has no notion about time value of money, value cannot be computed without time value of money. And P has no notion about the discounting the future to arrive at the present, and value cannot be computed without discounting the future. Therefore, P is a very narrow description of near-term, short-term picture of profits compared to its market value. While value of a business truly is over lifetime of a business and its cash flows and its capital efficiency all summed up into a discounted value of that future is today. And therefore, Russia, for example, always has been much cheaper than India.
Yes.
Always has been a single digit P. Why it has not generated then the returns? Because P is convenient, often used by everybody, but rather a poor substitute. And therefore, many of our notions of India being more expensive and less expensive, or some market being more or less expensive, is colored by those P kind of notions.
So you won't call India expensive vis-a-vis the world?
I would say today, based on the way India's growth is positioned, the quality of its growth, durability, predictability, and the sheer force of its own that it has acquired, the belief about future, the confidence about future, all that put together, and typically superior capital efficiency. I talked about ROE for India for the first time exceeding and being number one in the world. All of these means that basically even with the large market performance of India compared to the rest of the world over last challenging period of last 2 years where so many geopolitical events have happened, this is not accidental. This is something which will prevail for a longer period of time. And therefore, when I look at that picture, I would say the Indian markets are reasonably priced. I won't call it out particularly cheap, but I won't call it outrageously priced either. Nifty also, if you look at 1 year ahead, is about 19 times. Even if I have to use P terminology, which is not the best way to define, but even if I use that, it's 19 times. No great shake. More or less similar to the past history, and today is much better than the past for a variety of reasons that I mentioned.
So 2 questions here, Bharat.
And one final point I'll put, which is more behavioral. Markets in the past in India were Kelo.
What?
Kelo, less mature.
Okay.
More reactive.
Okay.
And more short-term oriented, because the nature of the economy was such, and therefore predictability was low, and therefore participants in the market also reflected that on that set of belief about future which was narrow and short period. Therefore, Indian markets were characterized by much more violent cycles than they really deserve to get. But that was a reality, because economy, while micro part of the many businesses in India were strong, but the macro picture did not have the matching strength. Now we have got a macro strength of Indian economy, and the micro is getting better and more confident than it has been the case in the past. Therefore, that is one qualitative change which has occurred. Markets have acquired a greater degree of, so to say, mature ability to conceive and consolidate its own future. Secondly, for the first time, there is an emergence of domestic money, which is actually a great counterpoint to the foreign money, FII. Foreign money, both in percentage terms, has declined. It used to be 20 to 23% ownership of Indian markets. I think it is now probably 17% or 18%, somewhere there. Even though absolute amount has gone up, as a percentage of the market it has declined. But even more importantly, I think the impact and the quality of voice of foreign money has declined. Earlier, it punched well above its weight. Today it has diminished, because actually domestic money not only has been growing as a percentage, but also more importantly making more meaningfully wise conjectures about future than the foreign money.
Okay.
Both of these factors, the longevity provided by macro picture to the micro, and therefore more solidity to the markets, plus emergence of domestic money, both institutional as well as
Retail.
individual,
Yes.
provides a strong counterpoint to the foreign money, but more importantly, in terms of even judgment, it is reflected better. And therefore, systemically, I feel reduced volatility than in the past. And therefore, by implication, that market becomes much more love-worthy for a lot of others, including foreigners. So despite their quizzical month-to-month behavior of blow hot, blow cold, over a period of time, I believe foreign money will have a very important destination of Indian equity. They cannot do without that. And India will emerge as a standalone equity asset class,
yes,
rather than co-bundled as some Asia-Pac or ex-Japan or some
which is the case
emerging
today.
market or some such.
Yes. I always keep asking that question, when will Indian equity emerge as an independent asset class? You just painted over the last 50-60 minutes, you painted a very good picture of India. I mean, it's high time India enjoy the status of an independent asset class. How long you are going to club it with other emerging economies where there's no merit?
Absolutely. And I think all of these will mean that valuation of India is whatever maybe differing opinions on that. My submission would be that they are reasonable. They reflect the strength of the growth of the future. More importantly, its durability and predictability. Even more importantly, character of that growth rate and quality of growth rate, aided and abated by a confident local money with reduced systemic volatility of the market.
Wonderful.
And reduced cost of capital, which is always a sign of a better managed economy, which India is finally beginning to acquire.
Okay.
All that put together, I regard Indian market valuations as reasonable, fair. It's an even game to play. I don't regard
is that only a domestic view, or are the people sitting out there, the FIs, are also understanding this?
I have no idea about it. I can only put my view around. How rest of the others think. There are always differing views.
Yeah.